If you'd like to earn CPE credit for listening to this episode, visit earmarkcpe.com. Download the app, take a short quiz, and get your CPE certificate. Continuing education has never been so easy. And now, on to the episode.
This is Oh My Fraud, a true crime podcast where no one wants to sleep with any of our criminals because they're usually accountants instead of serial killers.
That's right. Oddly enough, lots of people are hot and bothered for Ted Bundy and Richard Ramirez, but nobody's hot for Bernie Madoff or Arthur Anderson. I'm Caleb Newquist.
And I'm Greg Kite, and this is part 2 of a 2-part episode about how my hero, ethics researcher Dan Ariely, got caught cheating on his ethics research, which broke my heart and also broke my brain.
And assuming that some of our listeners are too stubborn to go back and listen to part 1, here's a quick summary.
Previously on Oh My Fraud.
Dan Ariely was famous for his quirky experiments that explored ethical behavior.
He published a very well-received book called The Honest Truth About Dishonesty in the popular press.
He and his colleagues published an academic paper in 2012 with the super sexy title, Signing at the Beginning Makes Ethics Salient and Decreases Dishonest Self-Reports in Comparison to Signing at the End. The paper was very well received and extensively cited.
In 2020, Ariely and his cohorts published a follow-up paper titled Signing at the End versus Signing at the Beginning Does Not Decrease Dishonesty, admitting that they could not replicate the findings in their 2012 paper.
Along with the 2020 paper, they published the raw data from the 2012 report.
And then a gaggle of data nerds called Data Colada dug into that raw data and unequivocally concluded that the data used by Ariely in the 2012 paper was faked.
And with that, I think we're ready to jump back into our discussion in Lying About Lying, the Unethical Ethicist.
Part 2.
These folks at Data Colada, they first noticed that the raw data from the 2012 report did not follow the bell-shaped curve that even like data dum-dums know about, right? That there were basically this.
Everybody knows about the bell-shaped curve.
Right. So that there were basically the same number of people, 500 to 600, who reported that they drove between 0 and 2,000 miles, as there were people who reported driving about 25,000 miles, which was the median, as there were people who reported between 48,000 and 50,000 miles driven. And what's even kind of more interesting is that the raw data showed that no one in this data set reported driving over 50,000 miles. And 50,000 miles is a lot, but there's certainly people who drive that much in a year.
I know there's people who drive over 100,000 miles a year, and that's usually your people who, you know, it's like your road warrior guy, kind of your salesman who's got to go, you know, see a client here, see a client there, see a client over there. And so they're driving, you know, it's not just a commute from home to work. It's they're driving out to take, you know, for the client relationship kind of thing. Those folks can get up into the, you know, 6 figures mileage every year, and not just barely into it, but significantly into it. Yeah. So there's people who do that.
So did that make sense? Like the data did not have a bell-shaped curve.
Yeah,
right?
Because usually,
like on the tails, there would be a smaller amount, and the majority of it would be in the middle. Right. And the median and the median was 25,000, and there was as many people, for example, on the low end as there were around the median. That doesn't make any sense.
Right. Exactly. And that's kind of and like you said, it's like it's not a bell-shaped curve, it's more of a rectangle shaped curve which isn't a curve, that's a rectangle.
Yeah, it's not a curve at all.
Right. And
it's
so
a plateau.
Exactly, and again, they did show some variation because I looked at the data, and they did show some variation from the different thing, you know, the different levels of mileage, but it wasn't what you would expect, because you would expect that there's gonna be. I used to sell cars for a living for 6 months. It was the worst job I've had in my entire life. And
Fantastic.
there would be the occasional car that was 7 years old that had 3,000 miles on it.
Right.
And you'd go,
right.
okay, that's weird, and we can charge more for that. And it was a little old lady's car, and all she did was drive to the pet store to buy cat food every week.
Yeah. Right.
that kind of thing. So, but then, and then you also had the other end of the spectrum where you had these cars that were 7 years old that had 300,000 miles on
Right.
it. You go, how the hell did that happen?
Right.
But it did. But yeah, but even if you think about that, like most cars, they have like their the warranty on the car. It's like 3 years, 30,000 mile warranty, because they're expecting, and actually, the average or the median amount of miles driven is not 10,000 per year, but they're assuming most people are probably going to be over that significantly so that they can cut down on their 3 years. But they're using the actuaries to kind of figure out where's the sweet spot for cutting off our warranty, because there's sort of a normal amount of miles that people put on there where the vast majority of people are going to be lumped in there, just like how bell-shaped curves work.
Right. So based on that, the Data Colada gang, they concluded, and this is a quote from their blog post, I believe, "We can't think of a plausible, benign explanation for it."
Right.
Which is,
so
I think that's nerd. I think that's nerd speak for something fucked up is going on.
That is exactly. That's
so it gets, but it also gets.
You speak nerd.
I mean, yeah, of course. Yeah. So it gets.
We both do.
It gets a little weirder, right? They also there's this problem with rounding, right? When people self-report large numbers, they often round the number. Okay, this can be seen in the baseline data, which was carried over from the prior year, like you mentioned. About 25% of the baseline data ended in a 0, but only 10% of the updated data ended in 0. So that's a significant difference, right? So if you're saying, if from the original data, if 1 in 4 of the reported mileage ended in a 0, okay, right? Baseline data. But then the updated data, only 1 in 10 ended in a 0. That is suspicious, right? Like people, because I think about it. If you even think about it, when I've done it in the past, I'm like, nobody memorizes their odometer every time they get out of their car. They have it. They look at the first 2 numbers and they're like, 49,000. That's what it is. And then like when you think about your insurance, you're like, yeah, it's around 49,000, but it's not like 48,767. Like nobody reports their mileage like that. Right.
And the funny thing about that also is when you think about it, 10% of the data ending in a 0, there's only 10 digits that can be in that ones column of your, so 10%, that's only 10% of numbers in the universe end in 0. So that's a reflection of reality.
Right.
So that's why you can definitely conclude no one rounded in the second one, whereas people did in the first one. And I think that's what the Data Colada people were getting at, is that it sounds like there's been other studies where they do say, people are likely to round when they're self-reporting large numbers, and that just didn't happen with the
like
data
your income,
that
your
already
income,
was
for
fishy.
example. Like if you were asked to report your income, you're not going to report like down to the nickel. You report like your round figure, like of your gross income.
Right.
Yeah.
Unless you're a nerd and you pick out your tax return from the prior year and you go, well, are you talking about gross income or adjusted gross income?
Adjusted gross income?
And even then,
right.
Yeah.
And then people want to punch you.
Right.
Okay.
But also, we're talking to a lot of accountants who listen to this podcast and are going, if somebody asked me what my income was, I'd ask them gross income or adjusted gross income, and then I'd go look at my tax return and I'd tell them down to the dollar.
Yeah. Fair. Okay. One more weird thing. This is fun. This next thing is fun. They also noticed that exactly half of the data was reported in the Calibri font. Am I saying that right? Calibri?
I think so. That's how I say it.
Okay, Calibri font, while the other half was reported in the Cambria font. So this is what it's come to. Following that a little bit deeper, they were able to then identify the Calibri Cambria driving twins. Okay. Drivers whose mileage mirrored one another, off by less than 1,000 miles, even across multiple cars.
Right. Which is okay.
Incredibly, that is incredibly suspicious, right?
It's incredibly suspicious, and it's totally fucking weird that these people be like, wait a second, I think the font is, and I even looked at the differences in the font. I wouldn't have picked up on that if I was just glancing at this data. Not
but if you were looking at it in a spreadsheet, the spreadsheet will tell you what the typeface is.
Oh, right. Well, and I think even you can find that information, and obviously they did. But like I said, just from glancing at it, I don't think I'd see it, and I don't think I'd bother looking up to see that the font type was changing as I scrolled down Greg, from cell to cell.
That's why you're not a data detective.
That's exactly why I'm not.
Like the data colada. These people are they're like data sleuths.
Right. Do you remember the song? Do you like data colada? No, I don't.
I mean, that's how Dan Ariely probably sings it now.
Right. He does. Definitely. He still likes getting caught in the rain, but he does not like data colada. But yeah, so even with that, I looked at a few of these and it was crazy because the way that they found these, my understanding of the way that they found the driving twins, like I said, there was people who reported 1, 2, 3, and 4 cars. And obviously it was a very small group of the people that had 4 cars that were under the same policy. And so they looked at just I think there was less than 20 respondents that had 4 cars. And they started looking at the Calibri versus the Cambria, and they were like, wait a second, these two drivers, and you tracked them year to year, and they their mileage that they drove each year for all 4 cars, tracked each other. And you go, that doesn't make sense. If you have 4 cars, again, I've got 3 cars, and one of them is my 1973 Ford Bronco, and
what do you put 50 miles on that every year?
Here's the
500?
thing. The years that I'm worried that it's because there's years where I'm more confident in it, years that I'm less confident in it. Right. And the years that I'm more confident, I drive it as much as I possibly can. Okay. But in the years where I go, it's driving a little weird, it spends a lot of time in the garage.
Parked.
And that's one of my 3 cars. The other cars maybe get similar but then you're not just talking about that. You're saying, okay, take me and some other person that also has 3 cars. Are we driving our cars the same, the 3 cars, the same? Each car has about the same number of miles, even though those miles are different car to car. You can go, okay, car 1 for both of us got 17,000 to 18,000 miles. Car 2 got 11,000 to 12,000 miles. Car 3, and you go, got 6 to 7,000 miles, and car 4 got 6 to 7,000 miles. And you go, that's really weird. And they found, I believe what I was reading was they were able to find twins for basically all of the cars in the data set where they were like that. And that seems fishy to me as well. So the data nerds, they found all these inconsistencies or all these things that were suspicious about the data. And like you said, Caleb, they even were this, they said in nerd-ese, this data is bullshit.
Yeah.
But they were also, at the same time, they were very level-headed about what the bullshit data actually means or what it actually demonstrates.
Right.
And this is a quote, this is another quote from their blog post, and it says, it's impossible to tell, because again, they were like, this data has been fabricated. But then they say, it's impossible to tell from the data who fabricated it. There are 3 logical possibilities: Ariely himself, someone in Ariely's lab, or someone at the insurance company. So just the fact that the data was fabricated didn't necessarily mean, hey, Ariely, you're full of shit and you talk about being honest and you are being dishonest because this data is clearly bullshit. So I think that's what you would expect from someone who's a super data sleuth, is that they would also realize the exact limitations of what their findings show.
Right.
And then the nerds also stated, and this kind of bummed me out, because they said, we have worked on enough fraud cases in the last decade to know that scientific fraud is more common than it is convenient to believe, and that it does not happen only on the periphery of science.
What does that last part mean?
I mean, the way I'm interpreting it is they're saying that there's some like core scientific, and again, I mean, we're talking, this stuff is published not in some, janky journal of weirdness that's
right.
It's like in a super well-respected journal in science, and that they're seeing fraud. And I guess that's what these guys, that must be their mission statement, is to weed out fraud in science. And they see that it happen, and I think that's the same case with financial fraud, is that we hope that it's only the occasional Enron and Bernie Madoff that does it, but in reality, it happens a lot more than it's convenient to believe.
So what does Dan Ariely have to say about all this? He maintains his innocence, and he kind of he puts the onus or the blame or the responsibility on the insurance company. And so we kind of break down some of the stuff that we found in terms of like what kind of where he's right, or it's some, there's other stuff that kind of points to something else. So one point in his favor is that he and his research partners published a blog post and that new peer-reviewed paper admitting that they couldn't replicate the results of the 2012 paper. And those were both published prior to the Data Colada blog about the falsified data, right? So they continued the research. They had contradictory findings, and they published the paper, and they said, hey, guess what? Contradictory findings. So right there, it kind of suggests that they're acting in good faith, right?
Right. You're not going to narc yourself out if you have nefarious motives.
Probably not. I mean,
right. Probably not.
I mean, I suppose you could kind of contrive a reason why, but it would be very kind of like unbelievable, right? Well, they would, this is why, to throw us off the scent or something,
Right.
And
it gets kind of conspiracy theory-ish.
Super.
If you
it goes straight to QAnon quick. Like it just wouldn't make any sense.
Right. But like you said, it's like a point in their favor, but it's not like a slam dunk. Okay, well then for sure they didn't fake the data.
Right.
It's just more like this might be an indication that they didn't fake
the data.
It
suggests that they acted in good faith.
Right. Yeah.
Okay. So then Ariely is quoted by BuzzFeed. There's a BuzzFeed article in the show notes that a very kind of comprehensive article about not only the findings of the study, but they talked to Ariely. They got him on the record for a lot of this stuff. And in that article, he's quoted, "I can see why it is tempting to think that I had something to do with creating the data in a fraudulent way. I can see why it would be tempting to jump to that conclusion, but I didn't." It's not really much of a jump.
Right. When when he says don't jump to that conclusion, it's like, it's not, we just kind of we like fell. We didn't jump to that conclusion. We just, that conclusion fell in our lap.
Right. And it's interesting because all 5 of the original authors, including Ariely, have stated that they agree with the Data Colada bloggers' conclusion that the data were faked, and all of their responses so the Data Colada folks, they reached out to the authors. All the authors responded, and they published their responses in kind of the footnotes of that blog post, and you can read them at the blog post. And I think we get to Ariely's response, but in any case, Like, again, it seems like everybody here is acting in good faith. And so
Right.
that
Right.
kind of
Well,
would lead you to suggest that kind of suggests that Ariely, he probably wouldn't be behaving this way if he were the one who falsified the data.
Okay. Gotcha.
Right.
And I mean, and again, if this is like a murder mystery, a whodunit, one of the things everyone is in agreement that the data was, no, there's nobody saying, no, that's the real data. That's really how people drive their cars. Nobody's doing that. So it's not so much is the data faked? It's who faked the data,
right?
Which I think is fascinating. That really narrows down the focus of the of the mystery.
Yep. So here's one piece of the story that counts against Ariely. At one point in the story, it's recounted by one of his co-authors, Nina Mazar, who saw, quote, what looked like a major error. Bottom signers seemed more likely to be honest, the opposite of the hypothesis. When Mazar pointed this out to Ariely, he told her that when preparing the data set for her, he had accidentally switched the labels of the top signers and the bottom signers. Mazar swapped them upon his request. Now that looks real bad.
That's so shitty.
That
it's like,
looks
this
real
thing we're
bad.
trying to prove, we see the opposite. So, you know what? I'm such a dum-dum.
It's just like on Big. Remember in Big where he's applying for the job and the guy's like, there's a couple of numbers missing off your social security number. And he's like, 17. Like he just puts it on.
I don't remember that, but that is awesome.
But I mean, it's one of those things where we just went through the stuff. We just went through the points where we said, it looks like Ariely's acted in good faith. But then his own co-author tells this story about, he's just like, I just mislabeled them, just switch them and it's fine.
Right.
That is, I mean, like people make honest mistakes like that, right? Completely plausible.
Mm-hmm. Right.
But also, you could, the other conclusion is just as likely. I mean, maybe not just as likely, but it's not unlikely, right?
Right.
Like if he decided, if he was the one, let's just for the sake of argument, if he was the one to falsify the data, this is how he covers his tracks, right? Whereas he just like, I made a mistake. You just got to swap them, and that was my bad. And so she did it, and then the data supports their hypothesis, right?
And again, in Dan Ariely's defense, like you said, that is something. I mean, we've worked with spreadsheets enough to know that you fuck them up from time to time.
Oh my God, yeah,
but
of course.
But also, I go, okay, if you're much more likely to make a mistake like that if you've gone through the whole spreadsheet and manipulated the data in the entire spreadsheet.
Right.
Because then that's when you go, oh shit, I did it backwards. I meant, oh fuck. Okay.
Imagine the biological reaction that you would have when that happens. Like that, like we've been in those situations where you do something.
Oh yeah.
Right. Where you're just like the pit in your stomach that opens. Like there's nothing else like it. Like there's nothing else like
lying.
it.
Yeah.
No. There's nothing else like it. There's nothing else that feels like that.
Mm-hmm. Yeah, exactly.
It's fucking terrifying.
It is. It's the worst. And then you go, and then you say something stupid like, I think when I made the spreadsheet, I just switched those around. And then as soon as you hang up, you go, holy shit, what the fuck did I just say? There's no way this is getting through.
I'm busted.
And then she just goes, then Nina Mazar just goes, I guess he switched them up. Cool, I'll switch them back for him. He goes, phew, dodged a bullet. There can't be a group called Data Colada out there that's going to double check my work.
So finally, there's one more point that might be in Ariely's favor. And it's from a quote from when he spoke to the Times of Israel. And he said, quote, I think my academic reputation will take a hit, but I have patience and I believe my studies speak for themselves. 5 years from now, more good studies we do will come out, and people will scrutinize the details and see they're fine, and will continue moving forward. So he seems like he's got a lot of confidence. But
yeah.
Con man is short for confidence man. And
True.
The best frauds, as we have well documented through many episodes here on Oh My Fraud, is that these perpetrators have a ton of confidence. So
right.
I don't mean to suggest that he's like being untruthful here, that he is like being like that he's lying. He's expressing his opinion, right?
Right.
And so you can't say that he's right or wrong. He's like, I'm doing work that's going to prove it out. So just watch. Like,
right.
I don't know. If I was in his shoes, I would probably feel the same way.
Right. And it's one of those, and I could see this going either way, where on the one hand, he just goes, yeah, listen, it was an honest mistake.
Right.
I got bad data from the insurance company. I should have looked at it closer. I should have found all these problems, but I didn't. And I just believed what was given to me. And that was folded into this study. So going forward, you'll see that my research is solid, because from now on, you're not going to find any problems in my research.
Right.
The other side could be, oh shit, I got busted for lying on this research, so there's no way in hell that I'm going to lie on any of my research for at least the next 5 years. Then the lies are back on.
Oh.
And that would be your response either way. Whether you got caught or you didn't, you'd want to have good, clean research going forward.
That's right. I mean, after this, there will be so many people paying even closer attention to the stuff that he publishes because of this situation.
Yeah, absolutely.
And so like he like you say, on the one hand, he's confident in his abilities and he's confident in the overall thesis, but also he's confident. It's like, I'm not an idiot. I'm not going to try to do this again.
Right.
Why would I do that?
Exactly.
So anyway.
Well, here's what I think, Caleb. I think that what needs to happen is that Dan Ariely and his team of researchers, they need to sign a statement of honest intent before they do every study that they conduct in the future, because that's going to help them be more honest with it. As a matter of fact, I say before they not only need to sign a statement of honest intent, they also need to brainstorm the 10 Commandments and swear on the Bible before every single one of their future experiments. And then that'll help me be more confident in the truthfulness of their studies.
I love this idea.
Take your own medicine. Swallow your own pill. So, Caleb, I want to talk about whether or not you and I, or even more specifically, I need to stop using Dan Ariely's research. And,
okay.
I mean,
Greg,
what do you think?
Greg?
Do you think...
Greg?
Yes.
Do you need to stop using Dan Ariely's book as a basis for ethics webinars?
I say no. I say I do not need to retract all the webinars that we've done in the past.
There's your surprise twist, podcast listeners. Tell me more, Greg.
Okay, so here's the big thing. So so one of the big things that he talks about, one of the findings that he has that I rely upon a lot, is the whole thing we've talked about, a reflection on a moral code. That if you have some sort of like honest reflection on whether or not you are an ethical person, that changes your moral behavior. And I believe that A, that's obvious. B, I feel like I've experienced that myself. So, and specifically when I was in my MBA program, we had it was what they call it. It was an executive MBA program. Not that I was an executive, but what that meant was you only took one class at a time. And every class was exactly 5 weeks long, and you did 4 hours of class on Friday night and 4 hours of class on Saturday mornings for 5 weeks, and that was your course. And we took an ethics class as part of our MBA curriculum. And so for 5 weeks, I was doing nothing but reading HBR ethics articles. And in that 5 weeks, I started making restitution like I was an alcoholic on step 9. I mean, it had this major impact on me because all I was doing for 5 weeks was reflecting on, am I a good person or am I a piece of shit? And what have I done that hasn't been morally perfect? And I was so like convicted.
You're lucky you made it
guilty.
out alive, man. You're lucky you made it out of that alive, man.
Well, and all I'm saying is I have personal, albeit anecdotal evidence that reflection on a moral code is incredibly powerful on the human psyche. So
yep.
I don't feel, I feel like I can still lean on, I still believe that even if the findings of this study are wrong or inconclusive, it seems like overarching principle, it's true. And it can have an effect. Even if we're not going to say it's not going to have a negative impact on moral behavior. And I've seen in myself that it has a positive impact on moral behavior.
All right.
Cool. I also want to say that signing a statement of honest intent, obviously it's not a silver bullet, but again, at worst, if you have someone sign a statement of honest intent and then they lie, you at least have a lot of rope to hang that person with. Kind of like what was it after Enron? They had the Sarbanes-Oxley Act. And the Sarbanes-Oxley Act required executives to certify the financial statements, to sign saying these financial statements are accurate. And the funny thing is, according to the research that was debunked, they signed that after the fact, not before the fact.
Correct.
So, but regardless, they signed it saying that it was accurate. So if it turns out to be not accurate, then everybody can go back and say, hey, look, you said that this was accurate. It's not. So here's your go to jail.
Can I quibble with you on that?
Please.
The only thing that is slightly different about that particular, the certification of the financial statements, is that everyone knew it was in the legislation when it passed and became law. So to implement it, every CEO and every CFO knew prior to the completion of the audit and the certification of the financial statements, they knew that they would have to do that at the end. But they knew it was in the legislation. They knew they were going to be required to do it. So even if it was already done and they signed it after the fact, they had knowledge that they would have to do it after the fact before it occurred. So it feels like they're not front running. I don't want to use that word because that means something else entirely. But it feels like because of that knowledge, it still feels like they're attesting in a way they're attesting beforehand, right? You follow?
I 100% follow. And more where I'm going is whether or not that increases ethical behavior or it has no impact on ethical behavior. I don't think anybody could say that that's going to make people less ethical by having to sign that. And regardless of all the ethical implication, you've got somebody who signed a thing, said these are good. And so if they're not, you can go and use that against them in a court of law.
Yeah.
That's basically
you said
where
right
I'm going with that.
Here's this is your signature. I love it in court when they're like, excuse me, this signature, is it yours? And people are like, yes, that's my signature.
Right.
And like, it's like, and the noose gets tight, and it's just,
Right. Yeah, and the people in the court, they all give a standing ovation to the lawyer. I've seen the movies. I know how that goes. So it's pretty pretty dramatic. Some of the things too, though, I do think this case is interesting because it puts some limits on some of Dan Ariely's own research. Like, for instance, kind of like we were saying with all the rationalization stuff, if a reflection on a moral code, if that makes you less likely to be unethical, if it makes you more likely to be ethical, then there are few people who reflect on moral codes more often than Dan Ariely. And clearly, if you think that he's the one who faked this data, it didn't work for him. So, and even thinking about that, we did an episode about fraud in religious organizations, and religions, obviously, people who are very religious, they reflect on moral codes all the time, but there's still plenty of fraud and theft in religious organizations. So there is a limit on how much reflection on a moral code is going to affect your behavior, ethically speaking.
As a Catholic adjacent person,
yes,
I can attest that early on in the Mass, and again, the Catholics listening will crucify me for getting this wrong, but early on in the Mass, there is where you absolve yourself before God to prepare yourself for the Mass. And I don't know know the exact language, but there is a moment in the Mass where that is the express thing that you're doing, is preparing yourself before God by asking for forgiveness for your sins. And so right then and there, it's like, you're in this holy place, so get ready.
Right.
Because you're gonna atone, bitches.
Right. Right.
know?
But I gotta think that a lot of that becomes just sort of rote and
Oh, for sure.
Thoughtless if it's happened all again and again. And it's funny because I absolutely can see that within myself, because I teach on ethics regularly. And there's been plenty of times it's been almost a decade. The first time I did ethics training was I think it was in 2013. And there's been plenty of times where I'll be presented with an ethically ambiguous situation, and I will choose the most conservative route because I have to go, I teach this stuff. There's no way I can be unethical myself. But that said, after doing it for 10 years, I also know that happens less now than it did at the beginning. So again, there's sort of this familiarity with the with ethics that almost makes you immune to the efficacy of a reflection on a moral code.
Right. Yeah. Fair enough. So, Greg, have we learned anything?
Yes, we've learned.
Good.
We've learned so many things, and a lot of it we've already enumerated. But a couple of things that we haven't really hit on that stick out to me. First of all, Caleb, never trust anyone ever, especially people that you admire and respect. I don't care if they have peer-reviewed papers that are published in scientific journals. Ariely's books were all lies. COVID was a hoax, and the media is all fake. Basically, I have to say this story turned me into QAnon. I am QAnon now.
Oh, hello, Q.
Hey, how's it going? No, totally Joe. Actually, the funny thing was even though that's kind of a knee-jerk response to a lot of what we talked about, when I think longer about what happened in this story, if anything, it actually reinforces my belief and my trust in science, because as we see in here, scientists, they call bullshit on themselves. Case in point, Ariely et al. Publishing a paper that contradicts their prior findings. So that's pretty cool that not only do scientists call BS on themselves, but there's also people like Data Colada who love to call bullshit on other scientists. So scientists call bullshit on themselves and they call bullshit on each other.
It's interesting. I don't know if they love. It would be. We should talk to these people.
They love it.
Maybe they love it, but they certainly feel duty bound to call fucking bullshit on people.
Yeah,
you know what I mean?
But there's also, you got to think that they got to get some kind of goose of dopamine for going, I got him. That there's a lot of sense of satisfaction of being the cop who solved the crime.
Yeah. All right.
The other thing that we didn't talk about so far in this podcast is that everything we talked about and even some stuff we didn't actually get to reinforces to me the effectiveness of transparency in the realm of ethics. Because one of the suggestions that the Data Colada people had, a suggestion they had to increase scientific integrity, is they said, hey, maybe what we should do in the scientific world is require people who publish papers to also publish their raw data at the same time. Because in this case, there was a 2012 paper that was incredibly influential. The data was not published until the follow-up paper 8 years later, and that was the data that the data colada people used to then to show that the data that was being used was fake. So if the data was published at the same time, then all of the data buzzards would descend on it and pick it apart and go, oh, this is wrong, before it had a chance to really disseminate throughout the scientific community. I 100% believe in that. And I've said this so many times in webinars and in live presentations, that transparency is, in my mind, is the silver bullet for unethical behavior. For instance, one of the things I talk about a lot is if even in little tiny things, like if you go, oh shoot, my cat is missing, I need to print flyers to post around my neighborhood to see if I can get my cat back. I don't have a printer at home. I need to print these at work, and I don't know if that's okay. There's one thing you could do is just do it anyways. And you don't know if you're being unethical and you're probably suspecting that you are. Another thing is to not do it and be frustrated that you're missing cats out there still being missing. Or the silver bullet, go and ask somebody in charge saying, hey, can I print missing cat flyers on this? And then if they say yes, you're totally in the clear. And if they say no, you know that you couldn't handle it that way. It's a total silver bullet when you're in an ethical dilemma. Ask somebody in charge and they will tell you what to do. It can be hard and a lot of people overlook that, but it's kind of obvious and it's right there. And then on top of that, whatever you can do just to make what you do more public, more transparent, that's gonna force your transparency. For instance, and Caleb, I don't know. I think I know the answer to this question. But if all public, because the data colada people are saying, hey, you have to we should require that raw data is published when the paper is published. In the financial world, if all public companies were forced to publish their QuickBooks file, I know public companies probably don't ever use QuickBooks, but whatever their accounting software file is, if they have to publish a complete set of books that shows all their transactions for the entire year when they publish their financial statement, then fraud's probably going to be, if it's not reduced, if it's not eliminated, it would at least be reduced dramatically. Do you agree with that? What do you think?
It would certainly have an impact, because you got to think that a lot of fraud, as we've talked about in the past, is like it gets covered up by, accrual accounting hijinks, right? Vague accounts and like in weird entries and like if that data were made available, let's just say, to everyone, your accounting equivalent of data colada, accounting colada, would come around and if they had, let's say you read the financial statements and you saw something fishy. You did some analysis and you saw something that didn't look quite right, and then it's like, I'd like to look into this further, and you can pull up and you can just pull up all the data, all the entries,
data. Right?
They'll find it.
Yeah.
Right. It'll be there somewhere. Right.
Yeah.
And so it would get rooted out. In the short term, it would get rooted out, and over the long term, it would probably reduce the instance of fraud. Yeah.
Yeah. But again, the funny thing is, you go, okay, so that might work for public companies, but for private companies and for smaller businesses and mom and pops who are still, arguably, who are more susceptible to fraud than the big public companies. There's not enough data geeks and accounting colada potentials out there to possibly root out all the fraud that's existing in all the companies. So
right. So much of it, even if you think about public companies, there's a reason, like, so, short sellers, for example, like you talk to short sellers, or you read their reports, or you hear what they say about on TV and stuff, and it's like so much of what they're talking about is fraud just hiding in plain sight,
right?
Because they're reading the SEC filings, they're using the same financial statements that are made available to everybody else,
right?
But they're the ones going to look for it, right? Yeah. And so, to take it just kind of that step further to say, yeah, not only are the financial statements available, but we're going to require like these massive uploads of data that are going to be made publicly available. Like, oh man, like who knows? Like,
right. And then
all the bodies are buried in those numbers somewhere.
Right. And likely somebody's going to create a program and a bot to comb through all that stuff too. So I think that could be good, but it's never going to happen because companies are going to be, that's proprietary information. If
it's
my
proprietary
employees can see
information,
every transaction, then
that's
my employees are going to revolt because they'll know what everybody else makes, and that's going to be, chaos and bedlam. So we can't do that. So it seems unlikely, if not impossible, that would ever become the common practice.
Given the state of things today. Yeah,
exactly.
Not in our lifetime.
But that's what I learned. What about you, Caleb? Anything stick out for you of lessons learned?
I like both of those things that you mentioned. I really like the point you made about science working, because I think you're exactly right. In this instance, the scientific process is to call bullshit on your peers, and and I guess for me, what it kind of brought up is, where and we were just talking about it, but it's like, where we could use some more accountability in the business world. Right. And like just even in the accounting world. Yeah. Right. Yeah. Right. And so the closest thing we have, and again, we kind of touched on this a bit, but the closest thing we've had is something that was brought up in our conversation with Professor Dan Taylor, which is the so-called kind of this idea of private enforcement. Right. Of fraud. And that includes journalists, lawyers, short sellers, those kinds of people who are on the lookout for nefarious activity and report on it one way or another, either through journalism or litigation, or in the case of short sellers, actively writing reports and selling short stocks where they believe there's fraud going on. And so conspicuously absent from those lists of private enforcement folks are business people, right? People that have the expertise to understand like what is going on, like an insider's knowledge of how things get done. Right. And I mean, there's a few, like there's obviously forensic accountants out there and things. There's people that do that kind of work. But as a general rule.
And don't discount internal auditors.
You're right.
There's no more private enforcement than an internal audit team inside a company, but I think those are kind of some of your unsung heroes, and there's a lot of they even an internal audit team doesn't exist in all businesses. So that doesn't contradict your point, but it does kind of broaden the number of heroes.
I think the other interesting thing that I learned that's related to this is just how strong of feelings people seem to have about this particular situation.
Specifically the Ariely situation?
The Ariely situation.
Okay.
Yeah. I read one column that basically said that, again, it kind of underscores the point that we made, which is this is proof that the scientific process works and is like and rigorous and robust, and that we should celebrate it. Because it does have this accountability mechanism kind of built into it. And at a time when so many people seem to distrust science based on basically nothing, science has just shown that it's extremely resilient in terms of like how it's done, how it's practiced. So I think that's really interesting. But then there's other people out there, academics, frankly, that are convinced that this is just, that they just see this is fraud in academia, and like that the system is irreparably broken. And especially like there's a lot of scrutiny on behavioral economics specifically. There's countless articles out there. That BuzzFeed article, the original article that I found when I actually brought this story to your attention, Greg, the Dan Ariely story.
You're the one that knocked him off my pedestal. Thanks.
Yes, indeed. Anyway, I went down kind of a rabbit hole on kind of the scrutiny around behavioral economics, and it's pretty widespread. Like there are people, there seems to be a contingent of skeptics around behavioral economics, and they are not shy about expressing their doubts about it. And the replication thing, the replication of the results is what is so difficult to prove. And so even somebody like, who hasn't even come up in this conversation, but like Daniel Kahneman, who's like one of the founders essentially of this field.
Right.
Kahneman, he has been criticized all over the place about some of the findings of his own studies.
Really?
And so like, and so
he's the big dog. He's kind of the godfather of behavioral economics.
Yeah. Him and his research partner, Amos Tversky, they were the ones who basically created this field and won a Nobel Prize. And I mean, I don't think Kahneman and Tversky. Kahneman won it in 2002. I don't remember if Tversky ever actually won a Nobel Prize. But in any case,
loser.
Well, somebody's going to have to keep me honest on that. I don't keep track of these.
No, I wasn't calling you a loser. I wasn't calling you a loser. I was calling Tversky a loser. Not winning a Nobel Prize like a little
don't
punk.
Speak. Greg, speaking ill of the dead. Anyway.
Oh, is he? Oh.
Yeah, he passed years
away.
ago.
Well, then,
long time ago.
Well, here's the thing. Then that completely erases the ethics from it because he's not around to get his feelings hurt.
Anyway, that was the other thing I had is like just how kind of, I don't know if heated is the right word, but there is some spirited debate going on around this stuff.
Well, and even that last part you said about people just thinking that science at large is corrupted. The quote from the Data Colada people about how widespread fraud in scientific research is, that was definitely disheartening. It almost feels like they're on that. I think that they would reluctantly assent to, like you said, the robustness and the fact that the science on the big picture, you zoom out, the scientific process works, but I think it sounded a little like they were a little depressed and a little defeated on how often they're seeing this happen.
Like we didn't need this.
Exactly. All right, that's it for this episode of Oh My Fraud. Remember, when you are signing a statement of honest intent, always sign it using a fake name.
And also remember, if you drive more than 50,000 miles in 1 year, you don't exist. Like Santa Claus.
If you want to drop us a line, send us an email at ohmyfraud@earmarkcpe.com. And Caleb, if people want to stalk and harass you, where can they find you out there on the internet?
On Twitter @CNewquist and LinkedIn /Caleb Newquist. Greg, what about you? Where are you at?
People can find me also on Twitter @GregKite, also on LinkedIn /GregKite. You can also, if you are in need of more ethics CPE, feel free to find my limited series podcast, Drunk Ethics, that's available as a premium podcast through the Earmark app as an in-app purchase.
Oh My Fraud is written by Greg Kite and myself. Our producer is Zach Frank. If you like the show, leave us a review or share it with a friend. Reviews help people find the podcast, so leave us a review. It's much appreciated. Be sure to subscribe on Apple, Stitcher, Spotify, or wherever you listen. And for the accountants out there, if you listen to the podcast on Earmark, you could earn free CPE. Nothing unethical about that.
No, sir.
Join us next time for more avarice, swindlers, and scams from stories that will make you say, Oh, my fraud.
My fraud.